Hi, thank you all for joining us today. This is our 8th demo day for the Stanford Blockchain Accelerator, and we're super excited to present the teams. Um, a bit of an intro about us. The Stanford Blockchain Accelerator is Stanford's first and only blockchain dedicated accelerator. Kuhn will give a bit of a background on it later, but basically we incubate teams and support teams from within the Stanford ecosystem. So that means at least one founder is a Stanford student or alum, and we support them over 10 weeks. It's a completely free and non-dilutive program, and the aim is really to help build and support the ecosystem of blockchain at Stanford. The teams have a wide range of different applications that they have, from fintech to blockchain infrastructure to AI to health tech, med tech, DeFi, and a whole slew of others. And we're at a really exciting place now where blockchain is really gaining broad adoption across the finance industry and writ large. And we're now seeing a ton of adoption in AI as well. I'm Gil, one of the co-founders, along with Kuhn and Steven, of the Stanford Blockchain Accelerator. We've been running this since this is our 8th cohort, so 4 years now. So since 2023, I believe, late 2023. And it's been amazing seeing how these teams have progressed. It's a joint effort between ourselves. It started off as part of the Stanford Blockchain Club and has transitioned into an effort that's run primarily by the CBAS, which is the Crypto and Blockchain Alumni Association of Stanford, which is an alumni club. With that, I guess quick background, I'm Gil, one of the co-founders here. I also am managing partner of Blockchain Builders Fund. Before that, I was a founder twice, building big data platforms before transition to the blockchain space in 2016 and doing everything blockchain. Went to business school over at Stanford in 2016, got a policy degree in 21, and met Kuhn, and that's when kind of all of this stuff kicked off. Kuhn, I'll give you a quick intro, and then Steven, you go ahead and we can go straight to the teams.
Awesome. Yeah, so this is Kun Peng, as Gil mentioned, started the program at Stanford Blockchain Accelerator, and so working with Gil on the and Steven on the fund side, Blockchain Builders Fund, and also teach a class at Stanford University called Blockchain Technology and Entrepreneurship. And also run a bunch of events like started BAS and a few other initiative. Yeah, so super excited and see it come a long way since the beginning of the program and see the cohort of 8th cohort members present today. So with that, I pass on mic to Steven. You're muted, Steven.
Sweet. GM. Good to see everyone. Yeah, great batch here today. So let's get to it. Yeah, Steven started a career at Google, built a lot of stuff there, went to Stanford for business school, which is where the Stanford tie-in. Then I've been investing for over the last decade at Capital One and then at Coinbase, and now here with these guys and also running these awesome Stanford programs. So let's leave it there and take it away, Gil.
Awesome. Okay, and from a quick housekeeping perspective, teams, uh, we'd ask that when it is your turn, kindly raise your hand and to whoever is going to be presenting, and we will give you presenter rights. So that'll make things much smoother rather than us having to try and find you. And if you have more than one person that's presenting and speaking, let us, please both of you raise your hands. We'll make sure to unmute the right person, but let us know who's going to be the presenter. With that, I'm excited that we're going to have things kicked off by Crebit. Super awesome team. They were part of Alliance DAO as well as a couple of other accelerators. And they've just joined here. So that's Simi and Jensen. Excited for you guys to kick us off.
Awesome. Great. I'll share my screen. Hello. Hi, everyone. We are building Crebit stablecoin-powered foreign exchange infrastructure. I'm Simi. I studied computer science and design at Stanford. I'm originally from Portland, Oregon. I love making mobile apps, and one of my mobile apps was recognized by Apple's Worldwide Developer Conference, and I've also done AI research at Stanford.
Pleasure to meet you as well. I studied electrical engineering and computer science at MIT. I've done software engineering for Amazon and NASA, and I actually got into the blockchain and fintech space through hackathons. I've competed all over the nation, winning competitions, and that's how I continued running into SEMI, and I was named one of the top 50 hackers in the world. One of my favorite projects was a secondary lending platform on-chain for credit unions that actually ended up getting acquired. I also did a lot of foreign exchange trading competitions back in university and was a winner in Harvard's FX trading challenge. A lot of the algorithms we use today to power Crebit were actually back from those competitions.
Jensen and I, we originally met at the Bank of America scholarship program back in high school. And ever since then, we've been building and working on different fintech ideas and projects. This past summer, with the Genius Act passing and a lot of the stablecoin regulation and infrastructure maturing across the world, we realized it was a perfect time to be building in this space. So we started working on Crebit. Today, foreign exchange is broken. Platforms like Western Union, Convera, and CXI rely on traditional SWIFT international wires. They can often take several business days and add a huge spread on the transaction fee. Stablecoins can solve that. Stablecoins are the future of foreign exchange with explosive volume and adoption and huge savings on cross-border payments. Over the past couple of months with Crebit, we've been working with several businesses, and one special insight that we learned is that a lot of these businesses need to hedge and they need to lock in foreign exchange rates, sometimes up to 180 days. For contracts, suppliers to plan ahead, to have more cash on hand. But today they're not able to take advantage of these stablecoin-powered foreign exchange because oftentimes a lot of these stablecoin quotes only expire in 10 minutes. With Crebit, we built the system on-chain to lock in foreign exchange rates up to 180 days, so that a lot of businesses can now take advantage of stablecoin-powered cross-border payments, and in addition to that, also lock in the foreign exchange rates. Here's a demo of the live Crebit site. Here, as you can see, we've modeled the Brazilian reais and US currency. If you don't lock in the foreign exchange rate, it can fluctuate a lot. With Crebit, we've allowed the ability where small businesses users can lock in foreign exchange rates for any duration that they really need, up to 180 days. We're able to offer forwards and options, and right now we're also developing a system where API providers can also integrate with Crebit, where we'll be having our own developer API system so that users can now access forwards and options as well. The way that we price our forwards and options is we charge an upfront deposit, anywhere up to 8%, depending on the duration and currency as well. In addition to our hedging solution, we also provide traditional foreign exchange with stablecoins. I'll actually walk through an example of what our platform looks like today. Let's just say you're a user who wants to send money from Brazil to the US. Here, you can select the US bank account that you want to receive money. And then you just type in the amount that you want to send from Brazil to the US. Get a locked quote. And we generate a Pix QR code. Every single country has their own native payment system. In Brazil, they use an instant payment system called Pix, which is like the equivalent of FedNow in the US. The user using their Brazilian banking app will scan the Pix QR code and send us the Brazilian reais. Behind the scenes, we do a stablecoin sandwich where we take the Brazilian reais, purchase stablecoins, immediately sell the stablecoins for dollars, and do a domestic wire to the recipient bank account. This is really exciting because users are now able to send money across borders at the fraction of the cost and also in just a couple of minutes. We've also abstracted the crypto complexity behind the scenes so that if a crypto native user wants to take advantage of stablecoin payments, they're able to do so as well. We're now working with importers and exporters directly for our hedging solution and foreign exchange solution. For example, we're right now working with a TBM textile, a textile factory in Brazil, doing over $40 million in foreign exchange annually. And they'll be working with us to also lock in foreign exchange rates as well. We've also started working with other on and off ramp providers. For example, Avinia, Fipto, and Lumex are design partners that we'll be using to offer our hedging and rate lock systems on their platforms as well. The Stanford Blockchain Accelerator has been a great program, and since starting Crebit in August, we've been part of Speedrun as well and Alliance DAO. We just finished up our Speedrun demo day in April, and we've raised $5 million in funding for our seed round. It's been really amazing working with so many partners, especially in the crypto space, and also, through Speedrun and the Stanford Blockchain Accelerator, we've been able to further develop our product and grow our solution. Thank you so much. And feel free, we're right now hiring as well. So if you're interested in learning more about Crebit and our solution, feel free to reach out to us.
Awesome. Simi Jensen, super excited by kind of both the solution and the traction that you guys have. You really, you guys have been killing it. Okay, next, we're going to go to the opposite side of things. Still in the stablecoin space, but we have a team called Nuvante that's building stablecoin clearing infrastructure. We've got Sam and Michael.
Okay. Gil, can you hear me? Hello?
Yep, you're good.
Yeah.
Okay,
Yeah,
great.
you're audible.
Okay, thanks. So, yeah, so another stablecoin themed business. So we are Nuvante Technologies, founded in November 2025. We are building a clearing platform for digital money. So our mission is to be the global leading platform for the clearing and settlement of digital money. And that includes stablecoins, tokenized deposits, and other forms of digital money. So for instance, it could extend in some jurisdictions to CBDC. So some quick highlights of the team. So we have very significant banking experience among the founding members of the company. We've also been selected by the Bank of England to showcase our clearing platform. So I'm the founder, Michael Chapman. You'll be hearing a bit later from Sam Lopez, who's our CTO. We also have Raj Sharma, who's our CEO, significant experience in scaling up businesses. And we also have an Asia presence with Veronica supporting us in business development. So across the team, we have significant achievements. During my time at Deutsche Bank, we generated significant revenues of over $500 million. We also have done a lot of leading initiatives in the tokenization space. I structured one of the first tokenized bonds in the Europe region back in 2024. Raj also helped the company go to unicorn status in an earlier role. So what we're looking to do here is to address a gap that's starting to emerge. So institutions must have guaranteed redemption and conversion infrastructure in order to be able to deal with stablecoins. So we're building that infrastructure that sits between stablecoin holders, and the stablecoin holders today are pretty much in the crypto native space. As we heard earlier, there are some FX and payment cross-border payment use cases, but there is going to be a significant growth happening. And what needs to really happen is to build that layer between the different stablecoin issuers in different currencies. And what we'll do is ensure that there's full synchronization between the blockchain and the central banks of those underlying currencies. So this is critical for stablecoin holders, for merchants, and card network providers. We also have had very significant interest from regulators and central banks who are curious and concerned with the development of stablecoins. Why this matters now? We believe it's a once-in-a-generation opportunity to build the stablecoin and digital money infrastructure of the future. The Genius Act, Clarity Act in the US, across other jurisdictions, regulation is being drafted and finalized. Financial institutions are starting to adopt digital forms of payments, and we are expecting very significant growth from the hundreds of billions to trillions for stablecoins, and you'd have tokenized deposits and other forms of digital money. So this creates a very significant opportunity. We're estimating anywhere between 1 to 5 billion in annualized clearing revenue. And on the FX side, we're looking at wholesale FX clearing of upwards of 40 billion. So what we're doing today is working with the Bank of England, and we're validating our proof of concept. So the stack you see in the middle of this slide shows where we sit. So we directly connect to the Bank of England's RTGS system, where we can fully synchronize settlements between accounts of the Bank of England and coordinate that with any stablecoin issuer on any blockchain. In the last 4 months, we've started to have discussions with various participants in the market. We've already onboarded 4 stablecoin issuers for the work we're doing with the Bank of England. We've had engagements with the Bank of England and FCA to become an FMI, which will then enable us to have the regulatory stamp of approval to provide this service. And that will also act as a regulatory moat for our business. In terms of pipeline, very significant traction with global banks, issuers. We're speaking to the existing crypto native stablecoin issuers, but also the new issuers that are targeting the traditional finance world. We're also having very early discussions with retailers who are seeing stablecoins as a disruptor to the network card providers. As I mentioned earlier, we are having very good engagement with various regulators, including the Fed, HKMA, Bank of Thailand. We are engaged with a very large US dollar issuer where we're working on risk and research items. We have recently signed an NDA with a very large global network card provider, and we're also now a member of the DTCC's industry working group. In terms of our roadmap, we are building our pilot and proof of concept with the Bank of England. That will be our key deliverable this year. And what you'll see later from Sam is a demo of our platform directly integrating to the Bank of England system. In 2027, we will move to a product launch, increasing the number of participants and different clearing workflows, with the eventual aim of also supporting multi-currency and FX from towards the end of 2027 onwards. I'll hand over to Sam for a quick product demo.
You're on mute, Sam.
Great. All right. Sorry about that, guys. Hey, thank you very much, Michael. I'll make this very, very quick. Let me just go ahead and briefly show our platform in action. Everything's already been front-loaded for the sake of brevity, but this is our platform. This is our, basically, our operational control center, where we have like the ability to perform a slew of activities, ranging from being able to monitor all the transactions that flow through it, all the way through, basically being able to onboard participants, from stablecoin issuers to clearing members. As far as clearing members are concerned, they have the ability to log into our platform. And once they log into our platform, they can view all their historical transactions and initiate new ones. So they can go ahead and go through the process of converting from one stablecoin to another, or redeeming from their stablecoin to fiat. I think for the sake of brevity, what I can show you is just
Sam, you're not sharing your screen.
Oh, give me 1 second. I thought I was.
We see it.
Oh,
yeah, we see it.
Yeah, I thought I was. Give me 1 second. So let me see. And now, how do I share my screen again? Shit. Okay, sorry about that.
Here on the bottom.
Yeah, sorry about that, guys. Okay, so like I said, as far as just the participants concerned, they can go ahead and go through the process of either converting transactions from one stablecoin to another, or converting from a stablecoin to fiat redemption, basically. So what I'll show you is I'll actually show you like the transaction here. That's already basically we already kind of have this in the records just for the sake of brevity. So participants have the ability to go in, they can go ahead and convert from one stablecoin to the next, which is what I'm showing here. Effectively, there's so much going on under the hood, but we've encapsulated all of that in like 6 easy to follow steps, ranging from like the point of inception where we receive the instructions. This encompasses like our entire validation process. We make sure everything's functioning properly at the Bank of England central bank level. And then at that point in time, we go ahead and we confirm and inform stablecoin issuers to go through their burning and minting process, and finally all the way up through completion. So I know this was a very, very, very quick introduction to our platform. But and my countenance may not necessarily betray my emotions, but this is very exciting because it effectively allows us to for the first time ever, this is like a demonstration of stablecoin clearing orchestrated through central bank settlement infrastructure. And then that's the mechanism that we truly feel is required to be able to scale and have stablecoin adoption at a global level, which is what we're working on and what this is. So thank you very much for your time. Appreciate it. On to you, Michael.
Okay, cool. So I've shared my screen again. So that we're looking to build the future of clearing for digital money. We welcome conversations from investors as we look to move from pilot to building a production platform. Stablecoin issuers, market participants, in particular banks, payment service providers, and central banks. So you can contact us on email, visit our website, or scan our QR code. We look forward to speaking to you.
Awesome. Thank you, guys. And really, this is what it takes for stablecoins to reach mass adoption here. So we're excited for Nuvante and team. Okay, next, we've got OneShot that are building the ultra high performance Web3 API for autonomous agents and intelligent wallets. Todd, I think we've got you.
All right, great. Good morning, everybody. Okay. So good morning, everyone. My name is Todd. I am one of the co-founders and the CEO of OneShot, and we are building enterprise-grade agent-native transaction infrastructure for the on-chain economy. Nowadays, gas abstraction is pretty much table stakes when you're building products like you're seeing here in the pitches today. When somebody onboards into your Web3 application, users pretty much expect to be able to use assets immediately. If I'm on Ethereum, I don't want to go acquire ETH in order to run transactions. If I'm on Binance, I don't want to go and acquire BNB. I want to be able to make interactions immediately. So gas abstraction is really critical for UX and agent experience nowadays. Existing relayer infrastructure solutions pretty much are actively agent hostile if you really look at them. This means high adoption friction. They're built on legacy developer experience and account abstraction standards because it's essentially an artifact of them being built before the time of agents. Modern solutions really need to consider gas abstraction and outcome scoped permission delegation. They need to view this as a single offering, which currently they do not. And they need to do this in order to really service the new paradigm of agent compatible on-chain products. And that's why we built the OneShot relayer. So the OneShot relayer is unique in that it's essentially the only gas abstraction and execution relayer on the market that is fully permissionless, meaning you don't need API keys, you don't have to pre-fund anything, you don't have to create a business account and add team members. It's immediately usable by humans and autonomous agents. That's a unique feature for us in the space. It is a pay per execution model. So you only pay when a transaction is confirmed on chain. We support or can support any stablecoin on any of the networks that we support. And another unique thing about us is even if the stablecoin you want to pay for your gas in is on a different chain than the network where you want to perform your work, this is fine. So if I've onboarded for 0 fees on the base into USDC, I can use that USDC to perform trades on Binance or Ethereum. I'm not locked to the network where I have my stablecoin assets. And we built this thing from the beginning to be as agent friendly as possible. So we've eliminated a lot of the costs associated with existing solutions. So you don't have to pay upfront when you're onboarding users for deploying new smart wallets. And also importantly, you don't have to pre-fund. You don't have to guess, how much money do I have to put into a paymaster for my existing user base, or if my app goes viral, and I have a spike in usage. The one-shot relayer handles all that automatically for you, whether you are a human or an agent. And then also for existing wallets, whether they're consumer wallets or institutional wallets, we can essentially turn any existing wallet into an agent-ready wallet with the way our permissioning scoping works, which means you don't have to provision new keys for an agent for it to do things online for you when you're not sitting in front of a computer. And you don't have to hand over control of your assets to a third party. So we enable a lot of these things for people building products in the space. And this is all a result of the convergence of 3 big trends that are really important. The first is AI-driven product development. So nowadays, nobody sits down and reads docs and manually codes up new products or features. This is not how things are done anymore. You fire up Cursor or Claude Code and you prompt new products. So this is agent-driven development. And this development paradigm heavily favors permissionless infrastructure providers. And you're going to see this outside of, Web3 and what OneShot is doing. You're going to see big Web2 companies start offering permissionless API resources. So that's the first trend. The second trend, as we've already seen in the other 2 talks, stablecoins. Stablecoins are exploding. They're becoming the preferred payment medium for the agentic economy. And if you look at it, both consumer and agentic wallets, these are both gas abstraction and intent execution problems at the end of the day. And the last big trend is the convergence of consumer interfaces into conversational consoles and voice assistants. So existing wallets that have millions of users need to have a strategy for how are people going to keep getting value out of those wallets when I'm not sitting in front of a D app approving every single transaction. That's not what people are going to be doing in the near future. You need a mechanism by which a user can essentially delegate permissions that bounds the allowable outcomes, inject that as a prompt, and then let the console agent do things for you. And that's what we enable with our product. We have 3 big wins that I want to cover that we've actually executed since the beginning of the SBA program. The first one that I want to highlight is with OKX. If you're not familiar with OKX, they are a top-tier global exchange that have tens of millions of users. Their wallet itself has tens of millions of daily active users. We power their gas station feature inside of both the browser and the mobile wallet. And just to give you an idea of the size of the market here, with just this one integration that we've done for one transaction type, we're on track to hit 2 million ARR just for this one integration. And in the first 3 weeks alone, we did over 4 million in ERC20 transfer volumes just with that one. The second one I want to highlight is with MetaMask. We were the first to market to support their EIP 7710 standard. So we're the first execution infrastructure on the market for them. We literally just got off of a live stream with the MetaMask DevRel team. We are co-hosting a worldwide hackathon with them right now, highlighting our developer ecosystem presence there. They're integrating us into their developer docs to be more of an official partner in their developer ecosystem. And there's a clear path to expanding into the MetaMask wallet itself. And then the most recent one, which we're excited about, is with M0. If you're not familiar with M0, they're a very successful stablecoin platform issuer. What we're bringing to the table for M0 is we enable gas abstraction and agentic utility for anybody that issues a stablecoin from M0. And what we get out of that is we get lots of credibility and new targets to grow our transaction volume. So we're in progress on solidifying a formal partnership with M0. The other thing, after we just finished the MetaMask stream this morning at 5 a.m., we got a cold outreach from the KuCoin exchange asking us about integrating into their exchange for gas abstraction and agentic utility. So that was exciting. This highlights 4 qualified segments for us: consumer wallets and institutional wallets, very clear segments for us, wallet developer ecosystems, and stablecoin issuers. So platforms like Kraken, Robinhood, Paxos, Anchorage, these are all highly qualified targets for us that we're in the process of outreaching for. There's also a clear strategic partnership opportunity with the Coinbase ecosystem. That's where we actually started out in when they launched their X402 initiative last year. We were deep in the Coinbase ecosystem. So we're working on formalizing something there in the Coinbase ecosystem. So kind of where One Shot sits in the infrastructure landscape, we are the only agent native relayer on the market right now. If you look at our 3 biggest competitors that are fairly well known, Gelato, Pimlico, Web3 Auth, these are all created pre-agent world. They're essentially based on legacy gas abstraction and account abstraction standards. They all require pre-funding. So that means high adoption friction. There's always a human in the loop. You can't just have a coding agent integrate these things into a product without a human or multiple humans getting involved. And they can't be used unilaterally, autonomously by wallet agents. It's not possible. There's also high risk vendor lock-in with the way that their legacy business models work. These essentially tax user growth with monthly active user overages, compute units, stuff like that. So they're, at the end of the day, not taking advantage of where the product space is going. And that's where One Shot really shines. A little bit about the team. All 4 of us have actually worked together at previous venture-backed crypto startups in the past. We all understand the crypto space very well, and we have launched successful enterprise products in the past, multiple. And what we're looking for is we're looking for venture partners to help us take this to the next level. So far, we have bootstrapped this entirely, taken 0 funding so far, and managed to get the wins with 0 marketing and 0 help from outside capital. So we want to raise a $1 million pre-seed at a 10 million post. Our 12-month roadmap is pretty clear. We want to ship and close new wallet integrations and exchange integrations. We want to grow our transaction volume. Our milestone we want to hit with this round, we want to get to 500,000 daily transactions, which would put us at around the 2 million ARR mark, maybe a little bit higher. And that's very high margin for us. That would put us at a very profitable company just with that transaction volume, which we think is very achievable. So if this is interesting, please reach out to us. We'd love to hear from you. Contact me at todd@oneshotapi.com.
Awesome. Thank you, Todd. Also, love the traction. Love how you guys are moving quickly. This next team was a YC team as well, and they're really redefining collectibles and collectibles trading. So CatchBack, if you could raise your hand, please, and we will make you presenters.
Hey, Gil, can you hear me?
Yeah, loud and clear. Awesome. Thanks, Joseph.
Sounds good. Hey guys, CatchBack Cards here. I'm Joseph. I'm a little bit sick today, so if I don't sound as enthusiastic, I apologize for that. But we're CatchBack Cards. We're part of the most recent finished YC batch, Winter 26. We're building the most thrilling way to collect trading cards. So a little bit different from all of the different companies that are, participating in the accelerator here. For context, the global trading card market is absolutely exploding. So Pokemon Card Company reported 6.3 billion in card pack sales in 2025, and this is just off of primary sales. There is a secondary market of resale of these expensive, valuable cards that transacts at many multiples of the GMV of the primary card sales, and this is kind of the market that we're targeting. The collectibles market as a whole is slated to be 550 billion by 2033. And collecting is more than just getting cards. When I first got into the industry, I was really surprised by what was happening. People were ripping open packs, getting hits, and then selling the hits on a marketplace. It's almost like a scratch ticket. So people would rip open a pack, like let's say a pack is like $10. They're trying to hit for a $20, $30 hit, and then they try to liquidate that hit onto like Facebook Marketplace, Instagram shops, whatnot, TikTok shops, whatever have you. And people are also buying and trading and speculating on the value of cards. So, for example, you could buy like a Shohei Ohtani card, and if he pops off during a game, then his card might go up like 2 or 3x. And then people are playing around with these cards as if they were like stocks. And collecting is a dopamine rush, a side hustle, as well as an access point to communities. And when I first got into the industry, I kind of thought about trading cards as like, $5 cards that you would buy from garage sales and stuff. But people are really spending tens of thousands of dollars on cards. It's kind of insane. And if you go to any sort of these like collecting shows, like Collecticon, there are thousands of people deep, people flying from all around the country. Each person here paid around $100 for a ticket, and then they're probably spending at least $1,000 just buying and selling cards. If you go on Facebook Marketplace, you can really find this like underground community of people who are transacting, buying and selling cards. We're building the most thrilling way to create and rip digital collectible packs, where users can pick their chases, risk levels, and pack price, and get buyback offers on what they hit. And I'm going to do a quick demo of what that really means right after I go over some of the traction. So we're approaching 900K monthly GMV, and we're growing more than 25% month over month. This is a little bit outdated. This is a presentation from a few months ago. But in terms of May, we're going to close over 800K monthly GMV, and our take rate is approximately 18% on that. So we're closing probably close to 1.5 million like run rate ARR is what we're at right now. So we're a mobile app as well as a website. I'm going to show you guys the website for the sake of time. This is our platform, catchbackcards.com, where users can create their own mystery packs and rip digital collectible packs. So, sorry about that. So what we allow people to do is rip open these mystery packs, and these mystery packs basically contain different cards. So in this mystery pack, this is a silver pack. This pack is $50, and users can hit various different cards that are valued at different prices. As you can see here, we give them the odds and probabilities. 72% of the time, they're going to hit a card valued between $25 to $50. 27% of the time, they hit a card valued at this price bucket, so on and so forth. So what we allow users to do is they would purchase this pack. It's a $50 pack. They see their odds and probabilities. They buy the card, and then they go through a checkout opening animation that shows them basically which card that they're going to hit. And then in this case, we paid 50 bucks. We're going to hit this Nidoking. We give them a crypto proof that shows them basically the randomness guarantee of like their pack opening experience. We show them the odds at which they hit this pack. And what the user can now do is it's a tokenized asset. They can either keep this card vaulted in the vault. The physical card holds on with ourselves, or they can basically get a buyback offer on the card, or they can list the card in our marketplace. So this card is valued at $31. We offer them a 90% buyback offer for 5 minutes, so they can get cashed out for $28. If you guys are familiar with like digital gotcha, it's kind of what we build. Our differentiating factor is the custom mystery pack. The custom mystery pack allows collectors to basically create their own mystery pack of cards that they want to collect. So our collectors are able to like fly through our website and pick different cards that basically cater towards their taste. Let's say you're like a Charizard collector. You can create a mystery bag of just Charizards. And then we charge you the average of what goes inside of your pack price. Here we have 6 cards, so everything is equal likelihood of being hit. And so we just charge the average of the 6 cards, which is $5,000. Then we allow our users to play around with the odds and probabilities of how likely cards are to be hit. And this basically changes the expected value of your pack, which is what we charge you. So you can make it so that you have a very, double or nothing type of experience. So as you can see here, we charge you like the average of these two. You can make it so that you have a very like risk averse. So you could like charge closer to the middle. After the user creates their mystery bag, they're going to click buy now. You'll see the opening experience again. And whatever the user hits, as mentioned, they can either get this card shipped to their house or they can get a buyback offer on the card. So we have maybe 5 or 6 other features, but in the interest of time, I'm just going to show this one feature here. Jumping back to the presentation, we allow people through the website or an app to create their own personalized mystery packs and to flip collectibles. So we allow people to basically buy and sell and day trade the rights of ownerships to the cards in our vault. So we allow them to flip collectibles in real time. And collectors love us because they love ripping packs and playing around with money. And collectors face the following friction points. When they rip open a physical mystery pack, there's low expected value. There's liquidation friction because they have to like buy the packs, bring the cards to a card show and sell them. And there's a bunch of different fees. We offer positive EV from our pack rips. We offer instant buybacks on everything, and we maximize the value that our collectors receive. So this is something about us. I'm the CEO. I went to Stanford for my undergrad and master's studying AI, worked at cloud storage, and worked at McKinsey as a consultant, then worked at a Series A crypto startup. And my co-founder, Sophia, we've grown up together since like elementary school. She's like a UI UX designer and 2D and 3D animations person. And with regards to competitive advantages, we have the custom mystery pack. We are very well connected with all the vendors and sourcers for Pokemon, and we are launching a trading card collateral lending platform soon. So the future of collectibles is imminent. As mentioned, we were part of the recent YC batch. We've finished out our round, currently not raising, but we're looking to connect with anyone who is a 2D, like 2D graphics designer, so Figma designers, as well as any software engineers who are interested in looking for a job, as well as videographers. Cool. Thank you guys so much for your time.
Awesome, Joseph, killed it. Thank you. And I think we're seeing how really this new trend of tokenization of physical assets, where we can see the traction here because the user experience is really optimized. So we're flipping to the other side of tokenization with ICME, and excited to have Helena and Arash present tokenizing pre-IPO securities.
Thanks.
Cool. Hi, I'm Helena, and we are building ICME. ICME is a stock market for pre-IPO companies. Companies can come to us to raise capital and have their shares trade with and without leverage. As you know, the market is massive. The wealth creation engine of the economy has mostly moved to the private markets, and 87% of Americans, plus much more globally, are legally locked out of it. And on top of all of that, a lot of private companies are also stuck. If you picture a company worth somewhere between $100 million to $1 billion, you can see that they've been, operating for a couple of years. They have a product with users, they have revenue, and people who actually care about what they're building. However, the IPO window for them is still very far away. And especially today, the IPO window is getting pushed further and further back. So the only real path to liquidity is going public or getting acquired. This really hurts employees who, may be holding life-changing paper gains that they can't cash out. And every growth round for the company means more and more dilution. And so you have this market where, equity is trapped and the market is essentially frozen. every existing path to fix this is currently pretty broken. Reg D is super easy to use, but again, it excludes most Americans because only accredited investors can partake in this path. Reg CF is interesting. It can let retail in, but you can only raise as a company $5 million a year, and you have a 1-year holding period as an investor in a company. And it's just too restrictive for very high growth companies. We also have ICOs, which we've seen create a lot of liquidity, but usually they exist without real equity rights, dividends, votes, or any recourse if anything happens. And IPOs, as you know, are the dream. However, they cost millions and require a company to be much, much larger. Reg A was actually, funnily enough, the solution to this. It was called a mini IPO, but the filing and audit burden is just so large that it makes the process way too expensive and slow, to the point where only $900 million was raised with Reg A in 2025. And so the middle market companies that are big enough to matter but not ready enough to IPO has really no good solution. And so this is where we come in. We are essentially building the answer. Internally, we call what we've done Reg A Tier 0.5, and we are seeking an innovation exemption from the SEC under the existing authority. And the idea is to preserve the best part of Reg A, which is the ability to raise $75 million through Tier 2, and also enable retail access, which means you don't have to be an accredited investor and you can be anywhere in the world globally. But at the same time, we are able to reduce the cost and time enough for a company that is valued between 100 million to $1 billion to actually use Reg A for their offering. And the second piece of all of this is market structure. Issuance, cap table, and settlement can happen on chain, which means that the security can now trade 24/7 with proper disclosures and controls. And the other really cool part of what we've done is we enable every secondary trade to route a transaction fee back to the issuer. If you look at Apple today, when it trades on NASDAQ, Apple earns nothing. But on ICME, if a startup does $1 billion of annual secondary volume, the startup is able to earn 70 basis points. So that's $7 million a year in non-dilutive revenue that goes back to the company. And in a way, it becomes, your tokenized equity becomes an asset class on your balance sheet. We've already started proving the various pieces of our business. On the issuer side, we've spoken to more than 70 startups, and we've selected 3 pretty good lead candidates that fit the ICM profile. And we have also done a lot, more sourcing through Easy Labs, Acti, 500 Global, and our third co-founder, Bill Tai's network. On the market side, Arash, Bill, and I, we previously worked on a project called Help.Fun, and we had generated about $1 million in fees in just under 3 months. And through that platform, we had issued 3 tokens, and we were able to do 36 million in volume with 5,000 traders. And so we're super excited to, tokenize this higher, more speculative asset that can, benefit everyone around the table, the stakeholders and traders as well. And on distribution, we're in conversations with exchanges and community channels like Wall Street Bets that can bring global retail liquidity at launch. And the legal team that makes all of this possible is led by Teresa Goody-Gullen. She was nominated to be the chair of the SEC in 2024, and she also represented CZ during his presidential pardon. We also have Charlie, who spent the last decade at the SEC working on the various reg exemptions. And then Andrew, he spent time at the SEC on the trading and markets team, so directs that part of the game.
And then as far as the rest of the team, there's Helena Zhang. She did her she did her undergrad at Stanford and previously had another venture-backed AI company. She spent a lot of her time liquid trading and investing and writing angel checks. I grew up in the sneaker botting world, got involved in crypto in 2024, where I then built the fastest mobile trading app for DeFi assets on Solana. And then there's also Bill. He's an investor through and through. He was the first check into Canva, first check into Zoom. He's been a part of over 23 IPOs and has a really deep understanding of capital markets. And then as far as some of the other folks on our team, we recently brought on the number 13 and number 9 employee at Polymarket. We also have people like Andrew Yu on the growth side. On our growth operator team, we have a total of around 1 billion combined impressions on the people's experience. And another hire we recently have made is James, who was the CTO of the company who created Daml and later acquired by Digital Asset. As far as how it works for a company who wants to launch, let's say there's a company that meets our criteria and we think would be a good launch. We work with them to come up with a number to dilute by, a range between 5 to 20%. Once that number is chosen, let's say they want to do 10% and they want to raise $10 million at a $100 million valuation, a sort of pre-sale would open up where people can commit money to it. And it's on a time-based window where once the window is closed, if there is more than the amount of 10 million in this case committed to the pre-sale, the actual issuance happens, people get the shares, and the issuer or the company gets to select who they want to give allocation to, and the people who don't get chosen get refunded. And then immediately after that, there's a secondary central limit order book that's launched where people can instantaneously trade the shares that they've purchased. In parallel to that, there will be a dark pool running on Canton with a lot of the liquidity bridged over from the club for more institutional traders to have privacy-focused positions. And through all of this secondary trading that happens, there's a non-dilutive fee that gets collected for the companies. And then this is a little demo showing the platform. Here you can see the market page, and then you can open certain assets. Up here you can view more information on any specific asset. You can view information on the company, information around the trading of it. On the trade page, you can obviously place trades. You can see your positions. On the portfolio page, you can see kind of how you're doing. On the activity page, you can see all your trades. And then there's also a leaderboard page, which we think is pretty cool, where people can, show each other their P&Ls and kind of how they're doing.
Cool. And yeah, we, want to fix private markets, and we're open to conversations with any partner, whether it be exchanges, startups, institutions who are interested in trading these private markets. And yeah, thank you for your time.
Awesome. Thanks so much, Elena and Arash. Excited for the day where this becomes easy and seamless. All right, now we're going to pivot a little bit over to the blockchain AI convergence, and we've got Supernet, who's going to share a bit about secure portable AI context. Whenever you're ready.
Yeah. All right, I'm unmuted now. Great. I'm Juan Bruce, the CEO and co-founder of Atomic Strata. So the first announcement is that Supernet is now Atomic Strata. And we're building a secure portable AI context layer on-chain. I went to Stanford undergrad for product design, did a master's in human-computer interaction, and later an MBA at the GSB. I've been a founder and an investor over the last 25 years. I've been in crypto since 2016, but prior to getting into crypto, I worked in marketing tech, ad tech, and enterprise data systems. My co-founder, Ethan, and I have known each other for over a decade. He went to MIT and was an early machine learning and AI pioneer. He's also been a multi-time CEO or CTO. He built an AI music startup, sold a machine learning-driven ad tech firm, and was architect of Audit Board AI, which recently had a $3 billion exit. Between us, we've had 5 exits, and we're uniquely qualified with our backgrounds in data, AI, and crypto to build on-chain context memory. Let's see. I get the slides going. So about 2 years ago, Ethan and I were angel investing in AI and came up with the hypothesis that after foundation models matured, context, or the way that data is brought to models, would become the next big area of innovation. And today that has come true. Every AI product is becoming stateful. Models are commoditizing, so the performance differentiator is no longer just the model, it's the context an AI product can remember, revise, share, and act on. Oops, wrong one. But today's AI context has several problems. First, it's siloed within apps. So if a user uses ChatGPT and then they move across to Claude or DeepSeek or Gemini or anything else, the context is not shared. And this is a big problem because over 72% of individuals and 59% of enterprise are using more than one AI platform at a time. This causes fragmentation, repetition of inputting prompts, low quality results, and drives users to lock into one platform rather than using the variety of tools that they want to use. Second, context isn't secure enough for high value or regulated work. Third, context wasn't designed for team or multi-agent management. There are no systems to get the right context to employees and agents. There is no shared context and insights for teams, no audit rails and compliance. And finally, for developers, context is a big black box. Different use cases in AI require different context. You don't want the same type of context layer for a 5-minute e-commerce chat as for a months-long financial or intelligence analysis. But today, context is not tunable or configurable. Developers have no idea how it is optimized for cost, quality, duration, models, and use cases. It cannot be configured. It cannot serve different teams, agents, or regulated workflows. It also can't be inspected or corrected, which means it cannot be governed. So opacity is a huge issue here. All of these issues manifest themselves across major areas of AI implementation. Users suffer working across siloed AI apps that are driven to lock into a single tool. Enterprise can't manage workflow context properly. Agents don't have mission scoped and audited context. And verifiable secure context does not exist for regulated industries. The market really needs a governed context layer that lives outside any single AI model, platform, or application. At Atomic Strata, we've answered this by giving users and teams a single, highly configurable context platform that includes security, composability, portability, and auditability on-chain. At the infrastructure layer, we have the atomic core memory and the Supernet blockchain. Atomic memory is a cutting-edge context technology that is currently outperforming incumbents in the industry. It combines multiple memory approaches in a hybrid associative context graph. It's highly configurable, inspectable, and correctable. Developers can tune it for the applications and constraints that they're working with. It also has active dream states, active intelligence, and insights, which we will demo in a minute. For developers in the audience, you can check it out at github.com/atomicstrata. Now, next to Atomic Strata is Supernet, our blockchain-based context layer for high security, composability, portability, and auditability. It's a bespoke blockchain built to be low latency for AI context storage, compute, and recall. It serves as a secure data pipeline with data access transactions that enable validators to unlock the context and forkless upgradability to keep up with the latest changes in our atomic memory technology. Supernetic is also composable with agentic transactions and can thus serve as an auditable agent data rail. On top of this infrastructure, we have an easy-to-use SDK for developers to implement context into their apps without any knowledge of blockchain, because the AI developer ecosystem is much bigger than the blockchain developer ecosystem. We also have reference apps that invisibly collect and inject and surface insights on the context. We'll demo one of those in just a minute. And we're developing enterprise solutions to let companies manage context across teams of employees and agents. So enough talk. Let's let my co-founder Ethan give you a demo of what active context can do with what we call our Atomic Radar application.
AI teams are moving faster across code bases. When agents make changes in one place, the rest of the stack can quietly drift out of sync. I'm going to demo how Atomic Radar uses active context intelligence to solve this problem. Earlier, the team approved a new website design, so I'm going to have Claude apply the changes. Claude is done, and we can see that the website now uses the new design system. But wait, Atomic Radar sees the website change and knows the website and docs should stay consistent. Radar gives me a link to inspect the affected docs immediately. The mismatch is clearly visible. Now I choose to bring the docs into alignment with the new website design. Radar turns the issue into a coding task with the context and constraints already packaged. The docs are updated, the brand is coherent again, and the team keeps moving. Radar keeps the audit trail. What changed, what it compared, what the developer reviewed, and what action was approved. What I just showed you is a single example in a system that constantly learns new patterns and skills. This is Atomic Radar, active context intelligence for teams and agents.
All right, so where are we now? About 10 days ago, we open sourced Atomic Memory, our core context. We've crossed 1,200 GitHub stars and 120 forks across our open source repos. The SDK is live. We have integrations with Claude Code, Codex, Hermes, OpenClaw, and others. We also have a partnership with Filecoin that you can check out. We launched Atomic Bench so that developers can test us against other context solutions. And currently, we are outperforming the competitors at lower cost. Where are we headed next? Well, we've started with open sourcing as a wedge for developer adoption and awareness. Then we're launching hosted products, followed by team and enterprise products like the Atomic Radar app that you just saw. And then we're launching Supernetic, the secure portable context layer on cryptographic rails, to address what we and many believe is going to be the growing AI security needs across the enterprise stack. So we're raising a pre-seed round right now led by Hack VC with participation from Marana Ventures. If you want to get involved, here's my contact information there with the QR code on the left. We're also hiring developers, AI researchers, analytical marketing, and product management. So feel free to reach out and check us out on GitHub and give us feedback. Thanks.
All right, awesome. Thank you, guys. We're going to rush to the next one, which is MosaicAI, and they're building the first distributed GPU network for model parallel LM training. So let's get them kicked off. They've got some awesome research that they've been basing this on.
Hi, Gil. Can you see my screen?
Yes.
Very nice, very nice. Hi guys, I'm David. I'm co-founder of MosaicAI. We are building the first distributed GPU network for cost-efficient model parallel LLM training, fine-tuning, and inference.
Oh, can you see his screen? Not.
My screen is not displayed right now.
No. It is not.
Oh, that's an issue we have right now. David, can you share the screen? We have a David as a backup, so we don't have to worry.
Is David, not David, made a co-host for presenting Gilakun?
I just made David a co-host as well. David, are you able to?
Yeah, he will try to present it right now.
Let me try.
Probably we can give our spot to the next startup, and we will solve this thing, and we can pitch MosaicAI afterwards if they are available.
It's on. David.
Okay, very nice. Well, yeah, sorry for the technical difficulties. We are building basically the first distributed GPU network for cost-efficient model parallel LM training, fine-tuning, and inference. The problem that we are seeing in the field is that the recent advancements in the AI basically have been the result of training increasingly larger models on waste data sets. Well, naturally, training larger models requires more resources because the model size grows, outpaces the efficiency gains in the chips itself, but also the second trend can be observed. As you can see on the chart that's on the right side, the model size growth have outpaced also growth of GPU with their memory sizes, meaning that working on larger models and training larger models is only possible if your setup can support model parallels. You have to cut the model into independent pieces and load it on these distinct GPUs. And this is only possible only hyperscalers. Existing deep-in networks are not fitted for that because even if they deliver on their promise and they can onboard millions of GPUs, because their independent clusters cannot load the full models, they are basically useless because they lack the orchestration layer that can simulate what hyperscalers have. They have these collocated GPU stacks which are connected with each other via NVIDIA Link, etc. And yeah, here our core innovation lies. We are building model splitting optimization algorithm that basically enables model parallel processing across low bandwidth diverse hardware environments. Obviously, our protocol, because it aims to train models in a distributed manner, obviously it has built-in features for fault tolerance, work verification, work estimation, and privacy. Let's go to the next slide. This is our scalable architecture. Basically, our scheduler receives the task from a user. Then our scheduler estimates what resources do we need to execute on the task, optimally divides this task between different workers, secures these workers, and then quantization process begins. We reduce the data that need to change the hand between the workers. We also have verifiers, which basically check intermediate output, so the work can be verified. This is what happens under the hood, but everything is very seamless for the front-end user. David, can you please do the live demo so we can show how all of this looks for the end users? Just give a second and we'll demonstrate how this happens on the user's end.
I'm having a connection issue. Let's, I think, finish the slides and maybe we can demo after.
Okay, no problem. Can you go to the next slide? Okay, yeah. Regarding our proof of concept, we tested our model splitting optimization algorithm on the Bloom family models. We achieved 10x improvement over leading alternatives and open source work such as Petals. We also benchmarked ourselves against offloading. Also, our advantage over our competitors increase as we test ourselves or large models. Our secret sauce and our approach lies into two techniques: in 4-bit quantization and weight importance estimation. Let's go to the next slide. Because our work involves some kind of performance drop, but big cost drop as well, our main targets and first users are not AI chatbots that need to respond live. We are targeting fine-tuning labs or ML consultancies or companies that are offering batch document processing or background code reviews. These are quite large markets for us. We've approached companies within this market and have also secured partnerships. Please go to the next slide. Up to this point, we've created the platform prototype. We will demonstrate it hopefully shortly. We have secured proof of concept, as mentioned, on smaller models, and we have engaged hundreds of entities, and we have multiple design partners in place, including companies such as Productivity, which basically measures how developers of different enterprises are performing. They are open to run their scheduled tasks around network. A little bit about our team. David is our mastermind. He's a PhD candidate at the University of Maryland. He's ex-Google and ex-Adobe. He has 10 plus publications on deep learning theory and reward hacking, and his work has been featured in top venues in journals, including ICML and NeuroIPS. I'm David. I'm MBA at Stanford University and co-founder of Investment Arc. And we are also joined by Archil, who is right now studying at Nanyang Tech University. He's IOI Silver Medal winner, as well as ISO Gold and Silver medalist. He has 3 Opus Hackathon first places, and he worked at Xsymmetry before. Let's go to the next slide. We are right now targeting to raise 2 million, mainly to launch private testnet, as well as test our approach on larger models. Our runway is around 18 months with this raise. And on the next slide, you'll find my contact info. You can email me at david@MosaicAI network. David, can you go to the next slide? Yeah. And we'll be very happy to share our benchmarks, how we got to this point, as well as detailed architecture and our application.
All right. Thank you, guys. Appreciate it.
Thanks.
Okay. Next, we're shifting on to the intersection of blockchain, health tech, med tech, and AI. So excited to present HealMint, which is building AI-powered care orchestration.
Hello, everyone. Can you guys hear me?
Yes.
Awesome. My name is Mengfan. I'm the CEO and founder of HealMint, and we're building an AI-powered preventive care. So everyone knows that the hospital admissions is very...
we can't see your screen if you're presenting.
Sorry, let me... Got it. Thank you.
All right.
Awesome. Thank you for letting me know. Well, so hospital readmissions is expensive and costing over 52 billion annually, roughly 15,000 per readmission. And it doesn't only impact on the cost, it reduces the health of the patient and increase the staff burden for the hospital, also reduce the efficiency for the insurance company as well. But actually, based on the research, 27% of the readmissions are potentially preventable. How we prevent those readmissions? Now, HealMint built this solution with 3 major components. The first component is the data layer. So in order to prevent readmission risk, we need to understand your past medical history. Then we pull the EHR data from the hospitals. We also need to know your real-time biometric data. We use wearable devices and medical devices and to collect your real-time biometric data. We also want to understand the cost of your healthcare. So we pull those data from the insurance company. In this way, we unified all three different kinds of data, and we fit into our machine learning model to predict the future risk. Besides that, we also use medical generative AI to generate actionable insights and guidance for patients and clinicians as well. On top of it, what makes us unique is we apply blockchain technology to ensure the healthcare data privacy, security, and to empower the users to own their health data. So far, we have built our initial heart failure predictive model, which shows 84% accuracy. And our model successfully identifies the risk patients by detecting the early markers before the readmission is required. We also manufactured our own smart ring. I'm wearing my own smart ring, and our smart ring is able to collect heart rate, HRV, sleep, activities, blood oxygen, and mental stress. But we are much cheaper than the other competitors in the market. Our business model is aligned with a value-based care model. It's pretty straightforward. We have three major revenue streams. Our target customers are hospitals and payers. So hospitals can use HealMint as a SaaS program, combining our wearable devices and risk analytics and AI guidance to help them reduce the penalty from Medicare centers. We also provide payers the wearable rings and devices and also risk management of their members to help them to reduce the cost. Over the time, we also see opportunity to take a percentage share of the savings that we achieved by preventing the readmissions. We foresee 500 million revenue by year 5 through this business model. We have a strategic roadmap to get there. And for year 1, we already completed manufacturing our own smart ring, built the predictive model, and fine-tuned our medical generative AI. We launched our MVP, and our wellness app is in test flight and going to launch on Apple Store soon. On year 2, we're going to expand to include 3 major high readmission disease, including heart failures, COPD, AMN, etc. And across the year, on year 5, we target to achieve 2,000 customers, including hospitals and payers, and to cover the entire ecosystem of remote predictive data infrastructure with a 100 billion market size. Our team is combining the deep expertise in healthcare AI, medical devices manufacturing, and EHR integration. I personally had 12 years experience in healthcare data innovation through Stanford Hospital, Capital Blue Cross, H-Metrics. I managed a $2 billion hospital cost analytics covering 3 hospitals and 100 clinics. I also had experience in Web3 working at Coinbase and Cello Foundation. My product team and clinical team has expertise in healthcare data analytics, data scientists, and medical AI. We are advised by a professor from Stanford Medicine School and also senior director from Scan Medicare Insurance Plan, which is the top 10 Medicare plan in the whole nation. Now I would like to invite my engineer, Vedant, to demo our product. During this demo, we're going to show 3 different perspectives. One is for patients, second is for clinicians, and third one is for insurance company, since those are our target customers. Cool. So, got it. And so first, we invite the customer, the patient, to do a pre-discharge surveys so we can understand them better. For example, their current diet and how mobile they are at home, and what motivates them to follow the treatment plan, if they have any dietary restrictions, and etc., and also their concern after discharge. Then, based on the answers, we are going to use our AI to generate a personalized treatment plan. Now, here we go. So we give an overview of the care plan, and also includes the daily routines. For example, we encourage them to record their daily weight and give guidelines for their dietary. Also the warning signs for them to watch for. We also indicate the motivation strategy as well. And daily check-in is very important. So we have this feature building on the app. The patient can indicate if they follow the medications, etc. And we also have a cool feature that we have the users to upload the picture or take a picture of the food they're taking, and we can detect the food type, calories, and if they are healthy for their treatment. For example, for this meal, that is ramen noodles, and we tell the heart failure patient that it's not healthy for them to take. Besides this, we also have the features to show their vitals, real-time vitals and risk scores trend, and also show them the rewards and badge they earned by following the treatment plan. Cool. So this is the demo for the patient side. Now we're going to switch to show the demo for the doctor. So imagine you're a doctor and then you log into our app. Here we go. So this doctor has 5 patients, and we prioritize the high-risk patients for this doctor to watch for. For example, Maria is the patient that we just looked at. It shows their Maria's vitals and discharge summary, and the risk score trend, heart rate, and the doctor can update the medication real time through our app. Also can leave like messages to the patients. Besides this, we have this cool feature that HealMint can call the patient on behalf of the doctors to save them time, just to check in on if the patient is taking medications and wearing our smart ring, etc. Now the patient answers the phone, and the answer is reported automatically on this app. And now we're going to switch to show the demo from insurance perspective. So insurance companies, they are the major payer for readmissions. What they care most is about how we can save the cost for readmissions. For this one, we show how many members enrolled in this program, how many readmission preventions we achieved, and also the impact by conditions, and the financial detail analysis and the quality measures impacted for them, which are very important for an insurance company, and also the cohort average risk score. For this one, we're able to improve or reduce the risk score by 27 for this cohort. Cool. Now we show the demo for the patient, doctors, and health insurance company through this process, and we would like to make sure that we coordinate care for the 3 major parties in healthcare. And before we finish the demo, I just love to give a quick summary of what we have already achieved and why HealMint can win this market. So bring back this architecture for hospital data. Everyone knows that data is a key to train any AI model, and healthcare data is extremely difficult to get. But we have already obtained 5-year EHR data from the largest healthcare systems in the world, and which includes millions of patients' records. From the hardware perspective, we already manufactured our own smart ring, and we're partnering with a manufacturer to create FDA-cleared medical devices as well. For the insurance company, we have signed the NDA with Scan Medicare, which is the top 10 Medicare in the whole nation, and also other top-tier health plans. From the AI side, we created 84% accurate heart failure model and already fine-tuned our medical AI and use agents to execute tasks for doctors and patients. On the blockchain side.
Mengfen, sorry,
Oh.
we gotta wrap up. We're quite a bit over
Oh,
here.
yes. Oh, okay, sorry. And one last thing is thanks for the Stanford Blockchain Accelerator. And we're selected by a top healthcare incubator. The news is coming soon, and funded by the Valkyrie Fund as well. And that's the end of the presentation. And if you have any questions, welcome to reach out to me. Thank you, everyone.
Thanks so much, Mengfen. Okay, next we've got Avinasi. And I know it's quite late where she's at. So thank you. Avinasi is building AI native infrastructure for longevity, focused on reproductive aging.
Hi, everyone. Second, I don't think I can screen right now.
Let me fix that. Apologies.
Well, while doing that, I guess I can do an intro very quickly. My name is Winnie Q. I'm the co-founder of Avinasi Labs. Here we also have Dr. Albert Ying joining us online. So maybe Albert, say hi to everyone as well. Are we pulling the?
You should be good.
Okay, let me try one more time. Can you see my screen?
Yes, we can.
Okay, great. So as I mentioned, with Avinasi Labs, our vision is to build the world model that predicts life and our longevity. So what does it actually mean concretely? Avinasi Labs is building the first commercial platform to integrate oocyte level biology, clinical treatment, and outcomes into a single predictive model. The first vertically integrated longevity AI spanning the reproductive care chain that no platform yet. And here is our team. Albert is the of Clock and also GPT, the foundation scale aging models. His work modeled the of nature aging. I bring the commercial side for Avinasi Labs. I actually have built one of the top 3 cancer patient communities in the world, which led to partnerships with Johnson and AstraZeneca, accelerated drug approval by every of 4 months. We are advised by Dr. Mike Snyder, Stanford, on multi-omics research, and Dr. Zital Liu as our clinical partner. And we also have strategic advisor Chase Deneck, who is a key influence in the field. So before we start, I want to ask all of you one question. Can we actually predict life using AI? The most popular investment thesis in AI right now says we can, but only for the physical world. Yan LeCun raised over $1 billion, and Fei Li raised hundreds of millions. Their thesis is to train AI in the physical world by putting glasses on humans and sending robots to factories, collecting the data that the internet alone gives them. That approach works for the physical world, but unfortunately, it doesn't work in biology. From cell to clinical outcome, biology's data is scattered across hospitals, labs, and patients' own bodies. And there's no equivalent of a wearable for the inside of a cell. Biology has no glasses. As we stand here today, despite billions of dollars of bets, despite the compute and despite the foundation models we have already built, there's no world model for longevity. However, there is one in biology the world can possibly be, and that is reproductive aging. A new life begins from a cell. The process is measurable, observable in an IVF clinic, and it happens inside, at a clinical grade systems, so the data is clean. And additionally, it's built into arms, can collect dimensions data as well. And critically, reproductive aging is one of the strongest known proxies for system aging. Because if a 40-year-old woman cannot have a baby due to her biological clock or biological age, and we can hands back, that is a functional aging extent we can measure in months, not decades. Reproductive aging is the one window where the data, the biology align, and that's where we start. Which is why we're building OmniGen, safer structure underneath it. And here's what most people miss about is public aging foundation models already exist. Dr. Albert here are two of them. And the public cohort already exists as well, such as from UK Bank. But what does not exist is ever long AI ambitions run into is the longitudinally linked and self-outcome clinical data that to train a real model. What we are building, OmniGen is the model, and underneath it is the moat. OmniGen three capability outputs: the cross-omic states, and so that it requires less data sets to train the future models, the disease and the treatment risk forecasting, so we can intervene before diseases occurs. And third, the intervention target discovery, so that the most underinvested field in biomedicines will have a tool to use. You might ask the question, so where is this data coming from and how we are building that infrastructure? Well, there are actually three acquisition services and one integrated into the database. First is our clinic network. Our AI agents work alongside with clinicians at our partner clinics in California and Hong Kong, with Thailand and other Southeast Asia clinics already in expansion. The agents reduce the real workflow burden for clinicians, and every patient visits will fit into the clinical grade omics data and the outcomes into our dataset. Second, our reproductive agent kit, co-built with our clinics and our Dr. Mike Snyder and his postdoc at Stanford. It maps the trajectory of a woman's ovarian reserve and gives her a personalized optimization plan. It is also the lowest cost data acquisition for longevity. Patients pay us to give us their data. And third, the insurance as our distribution channel. During the past 3 months at the Stanford Blockchain Accelerator, we closed a partnership with an insurance company that gives us distribution into more than 1,000 agents and over 100,000 self-pay customers. And 90% of them are women. That is the perfect user profile for us. And as of last week, they have also become our strategic investor. Putting all these three together, and this is our flywheel that we're building towards. Our AI agents sit at every patient's touch point, from the clinic intake to the kit results, and as well as the insurance distribution channel. We're stitching all these three otherwise separate data streams into a single longitudinal record per patient. But we're not there yet. We're trying really hard, but every patient that's coming in, there will be one more turn of this wheel. And once it spins, there's no public data set can catch it, including UK Biobank. So we would be the best one. And here's the thing, AI has actually already increased our productivity enormously. But in healthcare and in the real world, trust and distribution matters more than ever. And that is why in our first 12 months existing, we invested in both the trust and the distribution. Our insurance strategic investor gives us the distribution access to over 100,000 women health and fertility benefits customers through more than 1,000 agents, and the largest distribution in women's health that we could have anchored to. Our clinic network is operational already in California and Hong Kong, with Southeast Asia in expansion. And Albert just led our first autonomous intervention agent with a preprint in Nature Aging. That work can potentially discover drugs that's targeting functional aging in women once we put in more data into it. And finally, our work has already attracted government health departments who are already in active discussions with us on the population health programs. And those three signals, the insurance, the clinics, and the government, have mapped directly onto three future customer potential that OmniGen serves. First is the pharma for target discovery, biomarker validation, and trial enrichment for women's health, the most underinvested area in their pipelines. And second, the insurance for actual models and risk-adjusted benefits design. And the third, as we mentioned previously, is the government for population health and longevity program at a national scale. So patients consume OmniGen indirectly through our kits that we design and through the clinical decision support via the clinics. We don't sell OmniGen to patients, but we sell what OmniGen makes it possible. Just like we are using Anthropic, but Anthropic doesn't sell you Opus, but sell you Claude. To get there, we are raising our seed round, but because our strategic investment have already come in, our current priority is actually focusing on bringing more strategic partners that can bring us the bring us the insurance as well as hospitals to expand our data infrastructure. We're also hiring 2 founding roles, a founding ML researchers as well as a founding asset development scientist. We will offer a very generous referral fee convertible to our equity if anyone in this room can give us any hires and we hire the candidates. So help us build the world model for longevity and help you and us to live as long as possible. Thank you very much. And feel free to scan the QR code. We have Avinasi Labs. You will be able to also use our AI agents to help you live longer if you scan the QR code. So thank you so much.
I like it. And I think we all definitely want to live longer. Okay, last but not least, we've got Fiona and Genpulse, who's going to round it out, and they've got some insane traction here. So I'll let you share all the excitement.
Thank you, Gil. So yeah, hi everyone. I'm Fiona Val, founder and CEO of Genpulse. Since we're the last project, so I'm gonna cut in quick. So we're building the data infrastructure powering the next generation of medical research and consumer health innovation. We're backed by Solana incubators, Virtuous Venture, partnering with Stanford Medicine and Harvard iLab. We've hit 2.5 million in revenue with 68% month-to-month growth rate. And here's how we're doing it. Sorry. So 3 years ago, I was having hair loss issue myself. And like millions, I was spending thousands of dollars going to clinical visits and trying different products. The real problem wasn't just the hair loss, it was the broken data economy behind it. On the supply side, patients like me created valuable health data and got zero compensation. On the demand side, pharma and cosmetics spend billions on R&D, desperately searching for real-world patient data to validate products and understand consumer needs. The system is completely backwards. So I built what I wished I had. Starting with hair. Lush Hair is an AI-powered hair and scalp analysis app. Users take photo using our dermoscope devices or smartphone, and our AI analyzes 16 clinical-grade parameters, including follicle density, hair thickness, terminal hair ratio, and delivers a comprehensive hair score with AI-powered recommendation and historical tracking. Clinical-grade insights right in our pocket. But Lush Hair is just the consumer front end. Behind it is our real business, a data insight exchange that is bridging the patient directly with the health enterprises. Here's one example. A major Asian pharma company developing hair loss treatment needed post-market surveillance data and consumer insight to validate efficacy claims. We provided them our AI model trained on 420,000 validated scalp data across diverse demographics, all anonymized and compliant. Deal size, $1 million. Each scan generated more than $2 in revenue for us. And that's our model. Users contribute data and get rewarded with tokens and personalized AI agents. Enterprises pay us for validated data sets and trained model. Everybody wins. And we've built this as a 3-layer infrastructure. Tasks, direct-to-consumer data collection through mobile apps and portable devices. Datasets, AI processing platform that cleans, validates, and structures data to research-grade quality with full HIPAA and GDPR compliance. And models, enterprise monetization through data licensing and trained AI for drug discovery, product efficacy validation, and consumer insights. Our unique advantages lie in the medical collaboration we've built throughout the years with the best medical institutions across the world for model training, data annotation, and clinical validation. We've had active trials with National Skin Center in Singapore. We passed the IRB research in Stanford Hospital, and we're also preparing a paper for Nature in A-Star Singapore. And besides that, we've democratized healthcare insights to every user at their fingertips and rewarded them when they choose to contribute their data to further scientific research. The traction speaks for itself. Supply side, we've hit 50 million scans across 36 different countries, 420,000 validated data contribution, and 1,300 scans per day, 48% monthly data growth rate. On the demand side, the traction hits 2.5 million in revenue, 68% month-to-month growth rate, enterprise deals from $30,000 to $2 million with signed contracts from major pharma and cosmetic brands, plus active pilots with Philips, Estée Lauder, and Henkel. We fulfill the value of data not by selling them directly, but by systematically training proprietary foundational model and licensing the whole hardware plus AI plus research data infrastructure, making every step private and compliant while cutting off the billion-dollar middlemen. And if you visit our Genpulse website, you'll be able to see we are also preparing the launch of the upcoming product chains. LashHair is already active in more than 36 different countries, while Glam Skin would be our next new product that's focusing on dermatological analysis. And beyond that, by the end of this year, you'll be able to see AI for eye scanning, dental AI for the dental health, as well as gynecological AI that's focusing on female health. So our team is made of bioengineers from Harvard and National University of Singapore. Our CTO Hansen has 10 years experience in building healthcare information system, and Dr. Xingyun, our AI research lead, holds a PhD from NTU specializing in bioimaging AI. Our advisors include dermatologists from Stanford and Cambridge, radiologists from Harvard. Strategic advisors include co-founders of Keeps, ex-CPO of Microsoft, chief legal of Singapore's Monetary Authority, and CTO of Story Protocol. From our previous round, we're backed by Virtuous Venture, a listed pharma company, as well as Harvard iLab and Solana Incubator. We're standing at the intersection of health data and cosmetic data, and the future vision is to actually be able to empower every patient the health care insights within their fingertips, while being able to give them the empowerment of being the home data scientist and contribute their data for further scientific research. What started as my personal frustration with hair loss has become a mission to fix how health data works, and we're putting ownership back into people's hands while accelerating the research that improves life. The future of healthcare isn't just personalized, it's also owned by patients. Own your health, let's talk. Feel free to follow our X as well as visit our website. Stay tuned for the exciting updates for the upcoming years and upcoming product. Thank you so much.
Awesome. Fiona, thank you so much for running that out. So I think what's been really exciting about these 10 teams is seeing this shift from blockchain just as infrastructure and technology to really the application of it and how this is becoming very real and being adopted across a wide range of applications from health tech, AI, payments, FX, tokenization of private companies, collectibles, and more. So we're super stoked about where the direction that blockchain is going at Stanford and beyond. Hopefully you guys enjoyed today, and thanks to all the teams for an incredible few months together. And of course, thanks to Stephen and Kuhn for being my partners in crime here.
Thanks, guys.